Welcome into our Tull Financial Friday, where we give you a quick tip on just a topic that has to do with financial planning. Today's topic is the fun topic, the great topic everyone loves, tax planning. Drew Overton here heads up a lot of our tax planning strategies in our office, working with clients on those. And I know we're right around tax planning time, tax filing time actually is what I should say. Can you give us an update?
Yeah, and so that for individuals, tax filing deadline, as hopefully most of you know, has been pushed back to May 17th. And so we're kind of in that window now where if it was a normal year, you'd be late. But thankfully that's been pushed back.
A little breathing room.
Exactly, a little breathing room. So that's been pushed back. So if you haven't filed yet, go ahead and get to that. But as Phil said, today we're going to talk about withholdings. And I want to back up first and kind of say, what are withholdings? There's kind of two ways for taxes that you can withhold, and that'd be for W-2 employees, where you say, hey, your employer is required to withhold that from your paycheck, and you can withhold that throughout the year, and they pay that to the IRS quarterly as well. Or you say, hey, I'm not withholding enough, I have to pay estimated tax payments. And for most of the self-employed people, they're pretty used to that as far as those quarterly payments throughout the year. And so those are the two ways, and generally we're talking about your earning income throughout the year, you're taxed on that income throughout the year, but we want to make sure that those withholdings reflect what your liability is, and we'll get to that later as far as certain penalties that you may owe or over or under withholding.
Yeah, withholdings I know is kind of this big vague thing that a lot of people just, when they sign on with an employer, you go through, you do your W-2, you mark off how many dependents you have, and you call it a day. And so how does that impact, that marking of how many dependents we have or head of household, things like that? How does that impact from a 1,000-foot view?
Yeah, so what you're basically trying to do is say, how many deductions will you have? And so how will that impact your tax liability, which would then be reflected in your tax withholdings. And so when you're going through those forms with your employer and you're doing all those forms that are boring, you're actually trying to nail down and say, what's the exact amount of taxes I need to withhold? And that includes that W-4 form, which we'll get to later. But number one thing I think that we need to be aware of first is there is a penalty to an underpayment. And so if you're not withholding enough and you get to April 15th or May 17th for this year, and they say, hey, you didn't withhold enough, there is a penalty for that. And so to dive in a little bit, you need to withhold at least 90% of the current year tax liability or 100% of last year's, whichever is less. And so for the 100% number for last year, of course, if you have other income or if you have more income, some of those higher income people, that'll be adjusted to 110%. So our number one, rule or number one thing is, don't pay the underpayment penalty. Make sure you're withholding enough in your paychecks, so you can avoid that.
Yeah, no. We were even talking about just before this is we were both on both like the sides of it where you were owing and I was getting some money back on mine, and so one hurts, one feels good, but actually neither one is really truly what you want and what we're going for here.
That's right? That's right. Yeah. And so so that's another thing. I mean, everybody has it, everybody deals with it. So as he said, I owed a little bit, he got some back, and to start out with, for me, owing a little bit, I mean, it hit me. It was a decent tax bill, and it put a little cash strain on us for a little bit. That's why we advise people to have those emergency funds, in case of things like that. So that hurt a little bit. But then on the flip side, we were talking about how when people see that money hit their bank account, if you get a tax refund, some people think, hey, the government paid me money, like I've got more in my bank, I'm feeling good. But actually what you did was you over withheld, and so you kind of gave the government that interest-free loan. And so, I know rates are low right now, but it's kind of hard to get a loan from a bank for 0% interest.
Yeah. No one wants to do that.
Exactly. And so that's something you want to avoid. And another thing we were talking about earlier was, the opportunity cost of not investing that money.
Yeah, I felt that.
Yeah, exactly. And so the market went on a tear last year. You over withheld, the government was using that money, and you weren't able to invest that in the market. And so these are things we think about when you set your withholdings. So the ideal withholding would be, you net zero. So you don't owe anything, you don't get a refund back. Granted, that's very hard to do. It's very hard to, perfectly estimate your taxes during the year. But, we say if anything, maybe you owe just a little bit. So you're not, giving that interest-free loan to the government.
Yeah, and I mean, for me, like you said, it was painful on one end. It was painful for me on the other end, knowing what the market did over the past year, and I could have been putting that in the market and investing it, things like that. So there's an opportunity cost there. How do we implement that then? So how do we move forward and put these lessons into practice? And what time of year do we have to do it? Like at the beginning of the year, or when can we do it?
So there's a really good tool on the IRS website. It's their tax withholding calculator. And so what it does is it walks you through how to, project your tax liability for the current year. And so make sure you have your paycheck in your hand. It's going to ask you some specific questions. It'll ask, do you have a job? Does your wife have a job? How much are you guys withholding? How much did you earn? And it kind of walks you through the deductions as well. It assumes you're taking the standard deduction. And so there's some things, there's some intricacies in there, but it does walk you through really well. And so once it gets you to the end there, it basically compares, what's your tax liability, an estimate, and how much have you been withholding? And so from there, they tell you the difference, and they say, hey, you either need to withhold more or less. And it gives you instructions on the W-4 form, which is what we'll talk about next, which is kind of the withholding form. And so it kind of walks you through and says, here's what sections you need to fill out to make sure that you're not paying a ton at the end, or losing out on your money throughout the year. And so definitely a great tool online to take advantage of. There's a couple things to note on that W-4 form as far as if you have interest or dividends or capital gains or other things, other unearned income where you're not able to withhold. You can plug those things in and plug in your deductions. And so it really does get granular, but it's all for your benefit. It's trying to make sure that you're not withholding more or less than you should be. So
yeah, no, that's great. And another point is you can do that any point during the year. So I know we're in April right now, but you can still do it now. You can do it later on this year. Then you kind of alluded to it, is there's different life changes can happen throughout the year. So even if you set it one time, that may not fit you later on in the year. So you can tweak that later on, whether you lost a job or maybe your spouse got a job, and now you need to account for that as well. Additional capital gains and investments and things like that. There's lots to play into that. So utilize that calculator, utilize tax preparers. I know a lot of people are doing TurboTax, H&R Block, all these online different tax planning resources. So utilize those. I know they have even tax professionals that you can call within those different platforms. Your financial advisors, that's for projecting out, really looking out of, hey, what can you expect from those capital gains, maybe things like that. Find other strategies. I know we talk about strategies all the time. If you don't have an advisor, we'd welcome the opportunity as well. But any last closing tips or thoughts, Drew, that you want to give to us?
Yeah, I mean, I think Phil hit on it great. I mean, you can change the form anytime. So for those of you looking right now, go ahead and check it now. Now's a good time to check your withholdings, especially if you already filed your return for 2020 and you're like us and you either over or underpaid. Go ahead and make those adjustments now. And then throughout the year, if you have a baby, as he said, or if you have buy a house or anything that's going to change your tax liability, that should in turn be reflected in your withholdings. And so make sure you're talking to your tax preparers and to us if you'd like, and and just there's a lot to it, but hopefully we tried to boil it down for you and make it simple. But
yeah, we'll get to it. Get to those W-4s, get to that planning, and have a great rest of your week. Contact us if you need any help. Take care.